we're sitting at 684 to the US dollar. We saw the rand selling off quite aggressively last week. Some say that we could see a slow recovery this week. Others say that the bears could still have the upper hand. What are you reading into the rand scenario at this point?
Morning, Eleni. Yes, the rand is still weaker this morning, following on from last week. Last week it was hampered by some disappointing mining data, as well as comments from the finance minister. And this week, what we've seen coming out of China is some additional reserve tightening that could play into rising risk aversion. And so we've seen the rand still on the back foot this morning. Standard Bank's view is that it'll probably continue to trend weaker this week, although with the approaching holidays, it's likely to be a very quiet week on markets. So we wouldn't be expecting any wild swings in any direction, but certainly with rising risk aversion, we'd expect the rand to remain fairly weak for the rest of this week.
It's quite fascinating when you look at other commodity-linked currencies that they seem to have started recovering towards the middle of last week. Also, just keeping in mind that given the fact that we did see a bit of an aggressive sell-off on the local currency, some of the view that we could start heading back to around 670 or so. You did mention that we've got a public holiday at the end of this week. Could you give us a trading range for the local currency, given the scenario that I just mentioned?
Well, Eleni, we think that if rand bears manage to sustain a break above 685, then the next level we'd be looking at would be 691. But as I mentioned, because it's likely to be a quiet week, we wouldn't expect to see such a sharp swing this week. So it'll probably continue to trend around current levels between 680 and sort of 685 for the remainder of this week.
Reserve requirement hike out of China on Sunday. A lot of concern that is going to take the shine off risky assets. What kind of impact is this going to have? It's the fourth hike that we've seen so far this year. Do you think that it's mostly been priced in and that most investors are shrugging it off?
I don't think investors are shrugging it off, Eleni. As you mentioned, it's had two effects. Firstly, rising risk aversion, and then that's impacted on perceived risky assets, and so the rand is on the back foot largely as a result of China's tightening. So we would expect to see that continue to play out. But as far as the rest of the year is concerned, additional rate hikes out of China are expected for this year. So I don't think that investors are too spooked by this move, but of course there is going to be some impact on global growth, and with so much uncertainty over global growth this year, particularly on the back of troubles in Europe and then the earthquake in Japan, I think that we're going to have to watch this story fairly carefully.
With regards to the euro-dollar cross, also interesting to note that the euro hasn't really been able to sustain a breakthrough 145. We're now seeing the euro-dollar at around just 143, 144 or so. We've got Greek debt restructuring under the spotlight. How closely linked are we to this euro-dollar cross at this point, Nomvuyo?
I think that relationship is somewhat dissipated for the moment, Eleni. As you mentioned, the euro is now on the back foot. We saw it strengthen quite significantly before the interest ECB, and even in the wake of that decision, as investors thought that there may be an additional series of hikes this year. But that shine seems to have come off the euro, and of course as the debt crisis starts to take center stage once again, we actually think that the euro will continue to weaken, and we're looking for a level of about closer to 120 in the medium term. So certainly we think that the euro's rally is well behind us at this stage.